The Hartford Foundation is the steward of a sizable endowment. Actually, at the end of last year, it totaled over $900 million, and that endowment is intended to benefit the greater Hartford community. The Foundation's Board of Directors and the Investment Committee oversee the management of the endowment. And our collective goal is to preserve the purchasing power, the long-term purchasing power of the endowment, as well as to provide funds for current grants and expenses. In investing the portfolio, we emphasize portfolio diversification. And the reason we do this is that we want to minimize any damaging downward swings that can arise from having basically too many eggs in one basket. We seek to align ourselves with highly experienced investment professionals who have a coherent investment philosophy, whether it be the board members, the investment committee, staff, our consultants, and our investment managers. Everyone has the best interests of the Hartford Foundation and the Hartford community in mind. We're looking to work with people and firms who are expert in assessing risk versus return, and how we put the portfolio together in terms of the different kinds of investments we have is designed to be a balanced approach so that we're not exposed to any one particular economic force or market at any given point in time. And over time, and I stress over time, that tends to yield very, very good results. Last year was a good year for the prices of U.S. and international equities, especially in the most economically developed countries, as they posted very strong performance. For instance, here in the U.S., the S&P 500 rose 32.4%, and the U.S. mid-cap and smaller capitalization stock indices rose even more. So it was a good year. We're diversified, as I mentioned earlier, across a variety of investments. However, the majority of our investments are in U.S. and international equities. And as a result of that, our portfolios also did well. We aim, as I mentioned earlier, to achieve investment returns that exceed our annual spending needs for grants and operational expenses, as well as the rate of inflation. From September 1996, which is when we began to measure our investment performance at the Foundation monthly, through December of 2013, our corporate portfolio returned 8.1% on an annual basis, and that's net of investment management fees. And our trust portfolio returned 7.7%. Every dollar we earn in investments ultimately helps the community. And so that's how we think about it. How do we build wealth that will support the nonprofits in the city of Hartford and the 28 surrounding towns?